Hey everyone, welcome. Today we're going to dive into something pretty cool, how a few simple shapes on a financial chart can actually give you a heads up about major market shifts. Let's get into how you can learn to spot them.
I mean, that's the dream, right? For any trader or investor. Being able to see a trend is about to flip from up to down or down to up, that's an incredibly powerful skill to have. And that's exactly what these reversal patterns are all about.
All right, let's kick things off with the most fundamental and honestly the most common pair of reversal patterns out there, the doubles. Think of these as the ABCs of chart patterns. There's a really nice symmetry to these two. On the left, you've got the M shape, which is basically a warning sign that an uptrend might be running out of gas. And on the right, you have its exact mirror image, the W, which hints that a downtrend might finally be over. It's that simple. M for bearish, W for bullish. So let's zoom in on that M pattern, also known as the double top. The name really says it all. The price literally draws the letter M on the chart. And what that's telling you is a story of buyers trying to push the price higher and failing, not just once, but twice. So, what are we actually looking for here? Well, it boils down to three key things. First, the price hits a high and pulls back. Then, it tries to rally again but stalls out at that very same level, giving you two distinct peaks. Now, that failure is huge. It shows the buyers are losing their grip, but the pattern is not complete yet. The absolute crucial part is step 3. The price has to break below the little valley that formed between those two peaks.
And that valley floor, it has a name, and you're going to want to remember this one. It's called the neckline. Honestly, think of it as the trigger, the critical line in the sand. Until the price breaks through that neckline, the M pattern is just a potential setup. That breakout is the confirmation you're looking for, the signal that the sellers may have finally taken control.
Okay, so now let's flip the script and look at the W pattern. And here's the good news. If you've understood the M, the W is a piece of cake. It is the exact same logic, just turned completely upside down. It's the bullish version, signaling a potential move higher after a long downtrend. So here, the market is testing a low point twice, creating these two troughs. This is showing you that the sellers are getting exhausted. They just can't push the price any lower. The little peak in between those two bottoms, that's our neckline. And just like before, the pattern is only really confirmed once the price breaks above that neckline, signaling that the buyers might be ready to take charge.
So what happens when the market gets, well, even more wishy-washy, even more indecisive? That's where we get the triple top and triple bottom. A lot of times these patterns pop up when a double top or bottom starts to form, but then it fails to get that all-important break of the neckline.
And this really shows you the story the chart can tell. Just imagine traders seeing that M pattern form. They get excited, they start selling, fully expecting that neckline to break. But it doesn't. Instead, the price bounces and goes right back up for one last try at the highs. This creates that third peak, and it often traps all those early sellers, which can add even more fuel to the fire if the reversal finally happens. So really, you can just think of these patterns as an evolution of the doubles. 3 tests of a high gives you a triple top, signaling bearish potential. 3 tests of a low gives you a triple bottom, suggesting things might be turning bullish. The market is basically standing on a rooftop and shouting, "I really cannot break this level." Okay, let's break down the triple top. First, you're looking for 3 clear, distinct peaks all around the same price level. But, and say it with me now, the pattern isn't confirmed until the price breaks below the neckline. That's the line connecting the low points in between. A break here can signal a really decisive move down. Because hey, the market failed 3 times to go high.
And for the triple bottom, you guessed it. The logic is perfectly mirrored. 3 clear tests of a support level shows that the sellers are just out of steam. But confirmation only comes when the price breaks decisively above that neckline formed by the peaks. When it does, look out, because it can signal a really powerful upward reversal. All right, it's time for the big one. Let's move on to what is probably the most famous, and for a lot of traders, the most reliable reversal pattern of them all, the head and shoulders. Our source material put this perfectly, and it's the best way to remember it. Just forget the charts for a second, and picture a person's silhouette. You've got a shoulder, a head, and another shoulder. That's literally all you need to get the structure of this pattern. So the story begins in an uptrend. The market makes a nice run up and forms an initial peak. That's our left shoulder. Then you get this big surge of buying pressure. It pushes the price to a new higher high. This is the head of the pattern. But here's the twist.
The next rally is weaker. It fails to even reach the height of the head, and it forms a second, lower shoulder. This is a massive warning sign of buyer exhaustion. So to wrap this one up, it's a bearish pattern, signaling the potential end of an uptrend. You've got your three key parts: the left shoulder, the higher head, and the right shoulder. The neckline connects the two low points between the peaks. And just like every other pattern we've talked about, the real fireworks happen when the price breaks below that neckline. Whew, okay, we have covered a lot of ground, I know. So let's just take a moment and put everything together in a simple, easy-to-digest format. Think of this as your personal cheat sheet for these reversal patterns. This table just lays it all out nice and simple. You've got the pattern's name, whether it's telling you to be bullish or bearish, and most importantly, what the key signal is for confirmation. And do you see the theme here? Every single one of these patterns is only confirmed by a neckline breakout. If you take away only one thing today, let it be that. So, there you have it. You can now spot some of the most powerful shapes in technical analysis. You know what an M pattern is, a W pattern, the head and shoulders. You can see them forming. But seeing the signal, that's just step one. The real question is, once you spot it, what do you actually do about it? And that, my friends, is the next chapter in your trading journey.